Welcome, everyone. It's good to have you. We're going to have some fun today, I guarantee it, when we're talking about organic grain marketing. This meeting will be recorded and posted to the OATS website and YouTube channel for the benefit of those who couldn't attend live. So just so you know, it'll be recorded. Let me officially welcome you to the OATS Organic Advisor Call Series. I'm your host, Sam Oschwald Tilton, the training specialist with OATS. We're happy to have this series brought to you by not only the Organic Agronomy Training Service, but also Albert Lee Seed House. Albert Lee's a fourth-generation family-owned independent farm seed company with a full line of organic and non-GMO field crop seed and knowledgeable reps that I always appreciate talking to at trade shows. I'll put a link to their website in the chat, and thank you to them for their support of this series. OATS is governed by a consortium of universities, agronomists, crop consultants, nonprofit educators, and industry reps from throughout the country, and is fiscally sponsored by the Organic Trade Association. These partnerships are at the core of the OATS mission. OATS provides science-based training for agriculture advisors. We're a collaboratively managed training program for ag advisors around the country who work with organic farmers, transitioning farmers, organic curious farmers, my new favorite phrase, and we help to grow domestic and organic supply by strengthening the educational support network for the agronomists, crop advisors, extension agents, et cetera, that support organic farmers. So our aim is for every transitional and certified organic farmer to have robust access to technical service expertise that gives them unbiased and science-based agronomic support. This is the first episode this season. You guys are here on the ground floor. And there are 2 whole past seasons of this series available on YouTube. And we'll put that link in the chat now. So if you find yourself with nothing better to do than learning from past episodes of this series, please feel free. OATS also runs in-person training events, virtual courses, and we publish all manner of resources throughout the year. In fact, we're releasing a series of fact sheets and videos right now focused on organic grain issues, and you can find all those in our newly launched resources library. So we'll put the link in the chat now and feel free to look at that. And if you haven't done so already, I highly recommend signing up for the OATS newsletter mailing list just to keep up to date on these resources and other events that are coming up this summer. And I'll put the link to that in the chat now. And finally, we'll get our boilerplate out of the way here. Finally, your feedback is important so that we know how we're doing and we can get direction on bringing you the info that you want to know and nothing but what you want to know. We'll do a brief poll before the episode starts. It's just 3 questions. And then a short survey after. I'm hoping that the poll is showing up now on your screen through Zoom. So if you would follow that poll and take a click or two and give us your impressions now before we begin. But that is it for housekeeping. So let's get started with today's discussion. Our guest today is Ryan Koory from Argus Media. And I was able to visit with Ryan a few days ago and just get a gist for what we might want to talk about. And I just want to say that his experience in this field is really impressive to me. And I'm really, really happy and grateful that Ryan was willing to join us. So I'll start the conversation off by introducing Ryan, and then we'll jump in. And I assume you're tuning in today because you want to learn something. And so as we're talking, please do share any questions that you have in the chat. Because one, I'll try and incorporate them into the discussion with Ryan, and also we'll have a question session at the end where you can ask those questions of Ryan. So please feel free to put them in the chat as we go. Okay, without further ado, let me please introduce Ryan Koory. Ryan leads the Argus Markets reporting and the development of its expanding network of market data partners. As you'll see, working with these partners, Mr. Koory and Argus's reporting team produce critical data and insights for North American ag markets, including, why we're here today, organic and non-GMO commodities. Ryan spent more than 15 years producing data and research for ag markets globally. And some of you may know Mercaris. Prior to Mercaris' acquisition by Argus, Ryan worked as the Vice President of Economics there for Mercaris. So let me take a moment to welcome and turn it over to Ryan Koory and say, Ryan, could you please tell us broadly what you do at Argus? What is it that Argus does? What's the service that you provide to farmers?
Yeah, perfect. Thanks, Sam. And it's funny you asked that because you commented that all my experience in doing this, and it's funny because I really don't have much experience doing organics at all. To be completely frank, I'm a data guy. I joke with folks that I have the best job in the world. I get to do math and read ag reports and talk to people all day. It's a pretty good. I don't have to put much skin in the game.
Uh,
But really what we do is more or less what I just outlined. We have a collection of people who work within the organic industry and pretty much throughout the whole spectrum of the industry, everything from certifiers to producers to merchandisers, end users, traders. We try to have conversations and have data relationships with the entire supply chain. And through those conversations and through the data we're able to put together with those conversations, what we do is we try to create an ongoing picture of what's going on within the industry so that people who are either on the buy or the sell side, or if you're making a planting decision, wherever you're at in that process or in the industry, you have the best available information for you to be able to make intelligent decisions and try to avoid any potential risks and plan around those risks. We really kind of see ourselves as being transparency facilitators. I think whenever you look at an industry, whether it's organics or pretty much any other industry, you know, it's always been one of the things I've joked with farmers. I understand, and even on the merchandiser side, I understand that information is power, and no person is better off sharing the information that they feel like they're the only person who has it. But one thing that I've noticed in not just this industry, but in particular this industry over the past several years is that can work at times. But whenever we're all willing to have conversations and willing to kind of collectively think about the markets and think about risks, it makes for a better industry overall.
uh-huh.
Some of the crazy price spikes and some of the reactions we've seen to those price volatilities, over the past 5 years, a lot of those things could have been avoided with better transparency and better communication throughout the industry. And that's really what we try to do is try to facilitate that share of information so that the industry overall can protect itself better against risk and operate more effectively and more safely into the future.
Okay. Um, Maybe a good place to start is kind of about that. It's on the one hand, you're telling us that thinking about grain prices is very data driven, right? You want to have all the data. But on the other hand, it sounds like it's really important, the personal relationships. Could you say more about the difference between the fundamental data that drives maybe long-term price outlooks versus the kind of human relationships or market gossip that can have a real impact on short-term prices?
Yeah, absolutely. I think that there's been several examples of that within the past several years. And to your point, whenever we think about how we try to shape up data and think about the market and think about risks, that's where we try to sit. We try to make sure we're producing the best fundamental data we can. And what I mean by fundamental data is what is the hard numbers? How many acres are we dealing with? What's the pace of imports? What does demand look like? What are the hard fundamentals around supply and utilization, and where are those going? Because the truth is, with any market, a long market's a long market. Eventually, it's going to put downward pressure on price. A short market's a short market. Eventually, it's going to put upward pressure on price.
Uh-huh.
And those truths, they pretty much have to hold, or else you wind up in a perpetually long or short market, right? The cure for high prices is high prices, cure for low prices is low prices. We know that's going to be true eventually. But the reality is, whenever you're operating in an industry, and particularly one like this, that does tend to have liquidity issues at times, and it does tend to be a little bit more small and transactional, um, those long-term realities, even if they're on the books, they might not be driving the market at the moment. And
Uh-huh.
a good example of this would be, thinking back some of the examples of volatility we've seen is if you think back to like 2021, 22, 23, whenever we had our soybean price rally, I think the highest one that I think I personally saw was about $43 delivered on soybeans going into the Midwest. I think it was probably Wisconsin or Illinois, I forget where. What was interesting about that was in our conversations, most of the folks we were talking to were telling us that they were basically back to back on contracts. Nobody was taking a long position. Everyone was buying as if there were no soybeans to be had. And all that, of course, was on the risk of the loss of imports. That was at that time that COVID had occurred. We had the demand injection from that, and we lost India as a soybean meal supply. And the market reacted to those shocks by being very protective on the supply side. But what was interesting is that whole summer, watching those values, we also had the fundamental data to look at. And we knew the pace of soybean imports was great. Supplies were good going into that, and we were planting a ton of it. So we knew on paper we had a building storm of a long supply market, even as prices kept clocking higher and higher. Well, the reason that those two different things happened was number one, yeah, all those imports showed up, but in reality, a lot of them were delayed 2 to 3 months. So even if on paper you were covered through June, that shipment might not have showed up till July or August. So when you thought you had that coverage, it wasn't there. And that caused people to go in and aggressively purchase and try to cover that supply shortage.
Mhm.
And then there was a lot of uncertainty where things were going to go in terms of imports. And so all that is just kind of a micro example of how we try to position ourselves in the market. We try to come with as much of a fair and data-driven perspective of what we see in the market. And we use that perspective and we use it in the conversations we have to understand where the industry sees things, particularly in the short term, and how they're positioning themselves around those risks. Because those things are real. The
Yeah.
we look at, they're nice, they're hard. You feel like you can hang a picture frame on them, but in the short run, they don't really reflect the realities that people are facing whenever they're making marketing decisions. So we try to make sure that we're kind of in between those two positions and try to do as open and straightforward as an evaluation based on those as we can.
Yeah, I really like that phrase you use, or at least it stuck with me. Long-term realities might not be driving short-term prices. So on the one hand, we want to know kind of the scuttlebutt that's driving short-term prices, but we also want to know the bigger picture of, how are things going to resolve after a little bit. Um, Before we get into some more kind of case studies or details, and we will, I'm looking forward to that. But Ryan, can you also, organics and the organic grain market have come a long way. Could you give us some idea in the past, maybe 10 years or so, how you feel like the organic grain market has changed, or we could say maybe matured?
Yeah, I would say, and at the risk of angering some of the listeners here, because I know this word tends to be a bit of a divisive one at times, but I think if you're looking at like the corn and the soybean side of the industry, um, I would say really in the past 5 years, you've moved from an industry that used to be more of a specialty crop industry, and you would see more one-to-one type of transactions. It was not uncommon if you go back to 2019, 2018, for a merchandiser to go out and buy 3 years of somebody's rotation for their corn and soy. Was relatively common. Acres contracts were pretty predominant. Most people's grain was marketed before they ever got around to planting. You just kind of took domestic supply as that. You signed the paper, you shook hands, and maybe there's a small spot market activity that occurred on the side. I think we've seen that mentality within the industry pretty much disappear by now. And the reason for that is number one, as I mentioned, we lived through that period where we had unprecedented volatility from both the demand and supply risk side, which changed the way people thought about risk in this industry. I've always kind of thought about putting risk into two buckets. You've got one that is a price risk, and you got another that's a supply risk. And it used to be the industry was far more protective of supply risk because at the end of the day, you could go out and you could pretty much lock in whatever you needed, buy as much corn as you needed at about $8 per bushel, lock in your soybeans at $19 to $20 per bushel. What mattered was, can I make enough feed for the poultry? Can I process enough for my packaged food? Do I have my supply side locked in? And so
Mhm.
this was pretty much taken as a given, and people did larger, longer contracts to secure themselves against supply risk. And that has absolutely changed because now we live in a market that is pretty much persistently net long. Spot supplies of corn and soybean are pretty much, at least for the past couple of years, have always been available. So that means that there's less need to go out and make these long-term supply contracts. In addition to that, we've had a lot of price volatility, which means that if you lock yourself in on a supply contract, you now open yourself up to price volatility. And so It acts more like a commoditized market now. There's more liquidity, there's a more active spot market, there's less long-term forward contracting. Um, and so in some ways, to your point, matured, it looks more like a commodity market than it does a specialty crop market anymore.
Uh-huh. Could you maybe too also just say a word about the role that on-farm storage plays and how as organic farmers increase the on-farm storage they have, that can change the market?
Yeah. And unfortunately, that's one of the things. I'm a data guy. I wish we had better hard numbers on. Most of what we have to work off of is anecdotes and what we hear from farmers and merchandisers. But to that end, our understanding is the amount of on-farm storage is much, much higher than it used to be.
Hmm.
It cuts both ways for a producer, right? It could mean that you wind up holding on to more than you should, and you might miss some advantageous larger contracting because you're waiting for the price rally. At the same time, it buys you options. If you are in a situation, say like we were last spring going into planting, and we had corn prices that were just going down, down, down. Um, if you don't have on-farm storage and you're relying on your local elevator to take that storage come harvest, you have less room to contract and negotiate. You're more of a price taker. So
Yep.
now that we have more on-farm storage, it means that operators now take more price risk because of that. But in a sense, it also means that they are more well positioned to take advantage of price rallies. Like we saw this spring, for example. We had very bearish corn prices coming into the spring, coming out of last winter. We were kind of stuck in a situation around January where corn was like $6.50, $7. And it hit a bit of a rally around late February, March, April, where I think we saw corn come back up to about 8, 8.25 in parts of the Midwest. So on-farm storage is a tool, but it's a tool that you have to use safely and intelligently, because it does give you opportunities to capitalize on rallies, but it also gives you the trap that you
Mhm.
might not market forward enough at profitable ranges and then wind up long in a long market. So it's a part of an industry evolving and maturing and becoming more liquid and creating more opportunities to take advantage of price swings, but it's definitely one that has to be taken seriously.
Yeah. Yeah, I know when I'm talking to conventional farmers who are considering transitioning, a big thing we talk about is on-farm storage because for organic, it's got to be separate. And people might go in with the mindset, oh, I can just drop it at the co-op. But for most people in most locations, you can't just drop it at the co-op, and keep it organic. And so that on-farm storage, like you're saying, at least for some of your harvests, can be crucial. Um, okay, so thanks for that kind of background of the organic market and how it's matured or grown or whatever whatever value judgment we put on it. But if we can kind of get to the current moment now, can you tell us what's the current market reality for organic corn and beans? Um, and what does the future look like? But maybe just as importantly, because the future can change, what are the factors that you see kind of influencing current and future prices? What's driving where we're going? And again, kind of referring to, like you had told us before, both the background structural data and the short-term, realities of people talking.
Yeah, I think where we're sitting right now in the industries, it kind of depends if you're talking about corn or talking about soybeans, because they face kind of different fundamental realities at this moment.
And you make such a good point about this. Yeah, draw out like what about these crops and where they fit in a rotation. Yeah, really changes the pricing on them.
Yeah, and I think corn in some ways is maybe the more interesting crop to think about at the moment, because what's really happened within the organic corn industry in the United States, and again, maybe it's more of a value judgment than it's intended to be, but the industry has quote unquote matured. And what I mean by that is if you go back to, when I started doing this back in 2017, we pretty routinely imported 20 to 40% of our organic corn needs. We were pretty robust importers. And what that meant was the domestic supply picture didn't mean much for prices. Basically, we grew what we grew. That was all locked in under contract. And then we imported whatever the discrepancy was. And so we are more price takers beholden to imports. And with corn, that has absolutely changed. If you look at corn imports in the US, organic corn imports, we are now in a situation in which we only import from 3 different countries. And in any given year, we only import about 9 to 11 million bushels, depending on the situation. And if we look at those 3 different countries, you're talking about number one, Canada. Canada generally sends us 3 to 4 million bushels of organic corn each year. So about a third of our imports come from Canada. Now, the reason that Canada is kind of important to isolate is that in most ways, the Canadian market follows the US market because it's where they're basically just an extension of our production in a lot of ways.
Mhm.
Wherever the price is at and wherever the demand level is at, Canada's going to respond to that whenever they put in their acres to whatever amount that you can on organic. And so that's what they're going to send us. It's a relatively stable supply relationship, relatively fixed price wise to the US market. Canada will grow what they can and they'll ship us what we're willing to buy, and they'll receive currency adjusted, whatever, a freight differential coming into the US. There's not a lot to be said or to be thought about in terms of supply risk from Canada. Canada gets a bad drought in Ontario, you're probably looking at a drought in the northern Corn Belt.
Right.
Canada
Okay.
has a bumper crop up in Ontario, you're probably looking at a bumper crop up in the northern Corn Belt. The supply risk is basically linked to the US. There's not a lot there risk-wise that's not the same as what you're talking about in the US.
Okay.
But the other 2/3 of this import situation are number one, Argentina, and number 2, Turkey. And I'll come back to Turkey in a second because I think that's the more dynamic one. And whenever we look at Argentina, again, we're talking about 3 to 4 million bushels a year we import out of Argentina. So about a third of our imports. The situation with Argentina is, and it has been for a good number of years, that they have been net long on organic corn for a good number of years. And the reason that they're net long is that, much like the US, they are organic rotations. They are certified by the NOP, they are inspected, they have to implement rotations. And what we want to buy off of them, or what importers want to buy off of them, is oil seeds.
Mm.
For them to be able to produce the soy and the canola and sunflower that we want to import, they need grains in their rotations. And so that means that they have to grow so much organic corn. Now, the one thing that makes this a kind of another, again, a fixed relationship is if you look at how Argentina functions as an organic producing country, they are large exporters both to the US and to the EU. Now, where we get a little bit stuck is to be able to export to the European Union, they have a higher organic standard than the US does. So that means what Argentina grows for export to the US as organic, they cannot sell to Europe as organic. It would not meet their standards.
Wow.
And so that basically means that we are the fixed buyer of that. Either they sell it to us as organic and take whatever premium they can, or they have to dump it into conventional or non-GMO. They can buy a buyer. They really have no alternatives for marketing that organic corn. And so what that ultimately means is we have to buy some of that corn if they're going to grow oil seeds. And so we're pretty much always import about 3 million bushels from Argentina. As long as we need their oil seeds, that's probably going to happen. So, of that nugget that's imports, that 9 million, 2/3 of it's pretty much fixed. There's not
Yeah.
much that's going to happen there. Argentina has a drought, it'll short the import market. Argentina has a great crop, maybe it'll short it, or maybe it'll long it, depending on what it does to prices and what Argentina decides to do. Not a lot of volatility there.
I
But
think that's a really helpful point. Maybe everyone else was clear on that, but it was interesting for you to draw that out to me. It's just because of organic, we put more of a emphasis on crop rotation. And that means that if we want farmers to be producing organic corn, we gotta provide a market for the other side of that rotation. And that's what
absolutely.
grain buyers are doing with Argentina.
Yeah, yeah, absolutely. And that leaves the third trade country, and we're probably spending too much time on corn, but that's coming out of Turkey, out of the Black Sea. That's a little bit more of a unique relationship because we know that a portion of what Turkey is sending us is cracked corn, because that's what they ship us. They don't ship us whole corn for the most part. They ship us milled, cracked organic corn. Not all of that is produced in Turkey. The act of milling that corn in Turkey changes the country of origin of that product to Turkish,
Mm,
regardless of where
mm.
the corn itself is sourced from. So that means the supply side is a little more murky and a little harder to say exactly what the risk and the structure is there. The other thing, and this again is a way that we've seen the industry evolve, is most places that ship us organic commodities, they ship us in shipping containers, 20,000 ton shipping containers. The Black Sea business is pretty much all, or 20 metric ton shipping containers. The Black Sea is a bulk business. So they're sending us 15, 20, 30,000 metric tons out of whack because it's a bulk vessel.
Hmm.
Now, because there are these larger shipments, putting together these relationships is much more complicated, and it means that they tend to be slower to react to market realities. And that's where we see the most dynamic market outside the US for US supply is Turkey. And because they are such a large volume and they take longer to react to prices, there's always the risk that if you get a few large cargoes booked out of Turkey that do or do not show up or show up at the wrong time, they can short or they can long the market pretty quickly and cause some price volatility. So that's where you
Hmm.
really are looking at from a foreign supply perspective. 3 to 4 million bushels a year out of Turkey. That tends to be a little more dynamic and tends to be a little more volatility generating for prices.
Okay, that was helpful. So I feel like you broke it down pretty clearly for corn, the big export of Canada, Argentina, and Turkey, and they each export about a similar amount, but just have kind of different realities, and Turkey's maybe
Mhm.
a little more. Are you finding this conversation useful? Hit the thumbs up button to help others discover it too. And if you'd like more conversations like this, click subscribe and turn on the bell icon for notifications. Possible for change there. And so tell us about what we should be thinking about or looking at with soy now in terms of current market
Yeah.
realities and future.
Well, and maybe to kind of finalize the distinction there, to wrap up corn in a nutshell, we're
And
talking,
a
like I
corn
said,
husk, maybe.
corn and a corn husk. There you go. You're talking 9 to 11 million bushels of imports on any given year. And that is out of a total supply picture of about 65 million bushels. So we're talking a relatively small share of the total supply picture in the US, and it's a relatively fixed supply picture. So really anymore when we talk about the US market, what we're looking at is what does the domestic supply picture look like? Because that's the majority of supply. Imports are not going to respond very much to price signals. The domestic market's going to make the price signal. And growing demand domestically is really the thing that you need within the organic corn market if what you're looking for is something to come in and lift those prices short term or long term. Short term, you could have some kind of supply disruption, sure, and that could cause some volatility, and we've definitely seen that. But long term, to see, say, sustainable $8.50, $9 corn, so long as you have built yourself into what is a functionally long market every year because you are domestically self-sufficient on production and you have these few avenues of imports that you kind of have to just reconcile. Focusing on growing demand is really critical for creating price support in the organic corn market. Um,
You're saying there's been kind of a long corn market for a few years, and you feel like there'll continue to be a long market, and so that the answer to that is more growing the demand.
Yeah, I mean, and we can chip at the edges of imports a little bit, right? And I've kind of already walked through the three countries, and really the one that you're talking about that probably has the most capacity is Turkey to see a reduction there, and maybe some out of Argentina. But even if you chip at the edges there, you're talking 4 million, 5 million bushels of imports. You're not changing the fundamental domestic supply picture. That's almost all domestic acres. What
Mm-hmm.
you need is find new ways to demand organic corn. Either you need to expand livestock production, you need to find export markets, you need to find something other than livestock to use it domestically. Um, we have successfully become self-sufficient on organic corn, and the ultimate result of that is, well, now what do we do with it all?
Mm-hmm.
So, and in soy, kind of coming back around to your second point, it's not the same. In soybeans, we still import 60 to 75% of our soy needs. Um, and even on that, the import picture is far more dynamic. Yes, you have Argentina. Yes, you have Canada, but you also have the Black Sea. You also have India comes in from time to time still. You have a large portion that's coming out of Africa. And even the volumes that we import from Canada, they are indirectly related to what's going on with African production. And so the foreign market and what's going on there is a larger driver of the domestic price picture than domestic production because it is like corn used to be 5, 10 years ago, where you were relying on imports to fill out that demand picture or the supply side of stuff. Whereas that's where we are still on soybeans. So foreign markets set the soybean price in the long run.
Okay. And what would you say, what's the outlook on soy prices, say, going into harvest season?
You know, as a as
We're
a
gonna make you earn your money's worth here, right?
as all good economists would say, well, that depends. Um, you know, I think with the way that we're looking at soy prices right now going into harvest, and we've kind of held this position for a little bit, I think there's room to see sustained higher prices than what we've seen in the past. And I think we're starting to return to that. If you go back again, kind of thinking about where we were around harvest, I thought we were looking at maybe like $19 delivered for Midwest soybeans, Corn Belt soybeans. And we could see a situation in which you get back up to around a $21 to $22 soybean as a stable pricing point. And the reason for that is, at the end of the day, US soybeans are worth what meal imports cost, because
Mm,
that's where the value of a soybean comes from, right? It's derived from crush. And in the organic industry, we don't have a large, strong organic oil market. Most of the time, organic soy oil goes for, if you're lucky, 5 to 10 cents over conventional. If not, you're just clearing it at the conventional price, which means that an organic premium for soybeans is carried almost entirely by soybean meal. And
hmm
most of our soybean meal is imported. So understanding where the price of soybean meal imports is likely to go is really critical for trying to understand where you think soybean prices are going to go. And
Okay.
to that point, what we have seen is a market now where soy meal prices, if you go back again, getting in our Wayback Machine, and you think about where we were prior to the 2020, 2021 time period, we used to pretty consistently see soybean meal price at about $650 to $700 per short ton. And anymore, you don't often see it below 800. So the fundamental price below soybeans, that soybean meal value, has increased. The cost of freight's gone up. Um, it's just a different market than it used to be. And so if you kind of work off of that notion that you're probably looking at about an 850, $900 soybean per short ton soybean meal price as kind of the benchmark price for soybean meal, that bids you back into a range of around $21 to $22 per bushel for soybeans as kind of being
hmm
a steady place there. And so that's where we see long term, and long term could be harvest depending on how things shake up. Actually, at this point, it's not even harvest anymore. It feels like it's around the corner. I know we're just planting, but in watching ag markets, if you're into June, it's time to start thinking about harvest. But long term, structurally in the industry, we're in a situation in which beans are probably going to be able to carry a little bit larger share of the profitability in an organic rotation relative to corn, because bean prices are going to be supported by relatively higher meal prices than we've seen in the future, where corn prices are going to struggle because of a perpetually net long supply picture compared to where we've been
hmm
in the past.
Um, so can we kind of split up corn and soy as though they exist separately, but we also talked about in organic, we really have to market that whole
Yeah,
rotation.
yeah.
Um, can you talk a little bit about strategies to market the whole rotation? We've got a fair few advisors and a few farmers on the call. Um, yeah, what is it? Maybe just start with, what does it mean to market the whole rotation? And obviously, there's always going to be crops that there's more of a demand for, we can get higher prices for, but in organic, we likely can't just grow only that unless we took
Yeah.
our certifier out to dinner. But what are some tips for kind of marketing the whole rotation?
I think in terms of marketing the whole rotation, maybe there's kind of two different ways to think about that. It could be marketing the whole rotation as it stands now. And to that, you're probably talking about a narrow rotation that's fixed on a few crops that you have specific buyers for, and you can do successfully. But if you're talking about doing a larger rotation, maybe something that's got 4 crops or 5 crops, maybe you're integrating something that's of a higher premium value, like a food grade or a milling grade something. Uh,
hmm
Then in those types of situations, I think that those are things that you have to plan effectively ahead of time and with a good deal of consideration, you know. Uh, for example, you know, if you wanted to go into the high protein food grade soybean market, well, you know, make sure that you've got an elevator close to you that's willing to contract with you and do business with you and that you can get to effectively. Look around you. Who's in your neighborhood? Who's buying? Who's growing successfully? And start having those conversations a year or two before you plan on putting those into your rotation. Get your
Yeah.
head around how that market's going to work and get your head around how you're going to successfully produce that crop because it's, you know, there's a learning curve with taking on anything new, especially these higher grade crops that tend to have higher quality requirements. But with that, you know, once you kind of get a sense of, okay, well, what are the crops that are being successfully done here? Who am I going to be able to market them to? How do I fit those into my rotational plan? Um, then go out and start thinking about actual contracting and who can I contract with at what levels and how much? Because a lot of these things, you can't grow as much as you want and just have a delivery point. A lot of these things are under relatively small volumes that people are willing to contract. They like to contract with people that they know are going to do it successfully and have done it in the past. So you kind of have to be early to the table and be proactive in getting those contracts locked in and be cognizant if the price I'm going to receive is going to work out in terms of profitability for my rotation. So
Uh-huh.
it's really kind of a matter of taking a step back, looking at your landscape, looking at who's buying, who's producing, and figuring out what's going to work successfully for you, and then trying to pencil it out from a profitability perspective and come up with a plan. And you know, you have to adjust to weather, you have to make tweaks as you go, you have to be prepared to respond to the realities of the market and growing as you go through that process. But it is something you want to be pretty deliberate in and pretty active ahead of the curve if it's something
Yeah.
you plan on moving into successfully. But exactly what those crops are, it's going to matter a whole bunch depending on where you're at. And so,
Give us some more idea about that. You know, you have such a broad view, but it's like someone growing wheat in Iowa is likely not going to try and grow high protein wheat. You know, it's maybe going to be more for feed grade. Can you just give us an idea of some of those different like regional adaptations of crop rotations that you're seeing in different regions?
yeah, you know, I think on the high pro soybeans, there's a pretty good amount of those that are grown throughout the U.S. in different areas. You know, Michigan is always a hotbed for high protein soybeans. Michigan down into Illinois, Indiana. There's usually a pretty good buyer program there for high pro soybeans, depending on what variety you're looking to grow. But even outside of that, you know, if you're looking in say like Iowa, as you mentioned, that's a strong market for oats. There are a number of organic milling grade oat buyers in that area that could be opportunities to add another crop to your rotation and to have someone to work with as a partner there. You know, if you want to kind of move north, more drier, more cooler, and even back into like Michigan, you could look at doing things like pulses.
Mhm.
And again, these are markets that have a few strong buyers, and when they're done contracting, but there are opportunities there. So to your point, it kind of depends. You know, if you're going to grow uh, milling grade hard red winter wheat, probably don't look at doing that in Illinois. It's not going to turn out great. Uh,
Mhm.
so again, it's one of those things, talk to your neighbors, take a look around, and that'll kind of help you see what those opportunities are.
Okay. Um, Question from an advisor point of view. I feel like a lot of times when I'm working with farmers, it's not as an advisor that I'm so smart. It's just that I have time to look into things that farmers don't have time for.
Right.
Um, Given that farmers don't have all the time in the world to work on marketing, do you feel like there's areas where farmers tend to have blind spots in terms of what they know about the market or the kind of info that they're using for planning?
Yeah, and you know, I think this is where we try to interact with the grower side of the market the most because you're absolutely right. What we do, we talk with folks on a very regular basis who are consistently in the market marketing. And that means outside of a few large producers, we mostly talk to grain merchandisers because they're in the market in that way. And you know, for most producers, it doesn't do them a lot of good for us to pester them every 4 to 5 weeks and say, hey, what's going on with your marketing? What's going on with your merchandising? Where are prices at? Because they're not selling for the most part. I mean, we
Mhm.
talk, there's on-farm storage is up from where it used to be, but for most people, and they don't have the time. They're busy doing other stuff. So where we try to come in and just like conversations like this here and make ourselves available and try to help what we see as that information blind spot for producers is, I think producers have a pretty good handle on the here and now. They talk to the grain merchandisers, they're in the fields, they see what's going on, they understand where their crop's going. I think they are probably more well positioned than anybody else to really know the here and now. Where we try to make sure that we interact with the producer side of the industry and provide information is what are some of the fundamental drivers that we see being potential issues in the long term, right? We might have a price rally right now. Okay, what's behind that? But what's really going to be shaping this market 6, 8, 12 months, 14 months from now? What are the
Mhm.
trends? What are the factors that we need to be keeping an eye on to see how they develop? And where does that put those long range pricing risks within the industry and those long range production? You know, uh, I always kind of liken it to, in a lot of ways, it's easy to understand the symptoms of what's going on. And this is maybe one that's maybe
Analogy, yeah.
a little bit controversial. Again, I'm an ag economist, so I get to be all kinds of controversial. But there's often a lot of talk around imports, right? And the impact that imports are having on the market. And as we already talked, particularly within the soy market, imports do matter. They do drive a lot. But going after imports for import's sake isn't necessarily a productive way of benefiting the industry. I mean, we saw an example of that whenever we knocked India out of the industry. We had $43 per bushel soybeans for a moment. That was bad for the industry. Yeah, there were some producers who did really well over that interval. But as a result of that, the industry has consolidated. Now that we're back down to a more normal baseline, there are fewer people in the industry to do business with. And that's just what happened during the interval because prices just got really high.
Hmm.
Um, and so what we try to do is say, okay, well, we understand that imports are impacting the market, but why do we have imports, right? Imports aren't because imports are a product of how organic industry is structured. And unless you can actually and take a few steps back and look at those larger trends and what's driving those trends to understand how these things are shaping, impacting the market, and how we should start preparing ourselves and addressing these issues in a way that's good for organics, you wind up in a situation again like we had during 2021, 2022, where we just blew a hole in the market and ultimately didn't really do ourselves a lot of good.
Hmm. So speaking of imports, that's been in the news a lot lately with the Trump administration changing import policies. Could you say a few words on how the changing import policies either have changed organic grain prices or how you think they will affect organic grain prices, in the fall?
The way that we've seen them so far, and it's interesting because we keep talking about imports, and it's more of it's more speculation than it is actual fundamental change. Because in reality, nothing's actually happened outside of some trade issues with China. Everything else is just discussion of, you know.
Right.
And if like I know for the whole first chunk of this year, the big concern was with Canada. What was going to happen with Canada if we have a 25, 40, 50% tariff placed against Canada? That's going to be pretty much chaotic. And we were all very focused on Canada. And then once he made his announcement, Canada was completely off the table. There were no tariffs functionally against anything out of Canada. So we basically spent 4 months being very concerned about what was going to happen with tariffs against Canada for there to be no tariffs in practice. And then we wound up with tariffs against Argentina and everybody else for a hot minute. And then now they're all on pause. And
Yeah.
so um, the biggest impact that we have seen so far from discussions around trade and tariff and that stuff is the fact that it creates supply uncertainty and it creates pricing uncertainty. And
Hmm.
whenever you have increased uncertainty, people tend to not want to engage. And so we have seen reduced and delayed contracting for imports with, primarily with Argentina, their first stretch with Canada. Um, it has delayed and reduced people's willingness to make large contracts for future delivery because you don't know what's going to happen in the future. And with that, and even a little bit before with that, we have seen an increased interest and an increased emphasis in trying to build more of your supply picture out of the US because supply
Mhm.
wise, it's less risky. And so there has been some return to that, trying to build more of your supply base out of the US to protect yourself against those risks. But in terms of how they're going to impact the market into the future, I mean, it really just depends on where this roulette wheel of tariff, no tariff, trade policy ends, and if we do have tariffs, then how much against who, and that continues
Yep.
to be a huge unknown.
If you're saying that that general uncertainty kind of has people step away from the market and maybe be less willing to sign long-term contracts, can you give us an idea, or how can farmers be thinking about contracting their grain versus holding it and waiting for the spot market? That can be a really tough choice to play either way. Yeah, how do you think about that? How much to hold back and how much to contract?
Yeah, that boy, that I would be hesitant to give anybody advice on because, as I said, I don't actually do anything productive. I just sit back and look at numbers, and I don't want anybody getting mad at me because I said 20% versus 30. I think, in general, because I get this question a bit, I think at the end of the day, operators know, farmers know where they need to be profitable.
Hmm.
And whatever you can do to make sure that you're in the black consistently, I, to me, that would be priority one. Because there is a bit of a spot market, and sometimes it does flare up, and sometimes it does not for a very long time. If you are in a position where you can hold enough of your grain to market during those times when you get a little bit of price rally, or even if not, right? Like if you get in a pinch and you need to make some cash flow and you got to take whatever the market price is, um, I think that that is becoming an increasingly important part of managing your organic marketing is being able to be active in that spot market. But as
Hmm.
we discussed earlier, um, don't make that the way that you make profitability because that's kind of waiting on that lotto ticket instead of working for a paycheck. And you want to make sure that you're positioning your operation to remain in the black. That's really where you want to be, and let that guide how much you try to play spot market in the future versus locking in profitability.
Okay, so you're saying something like it's nice to have your farm be running in the black with a contracted price that you can kind of rely on. And given that, if your cost of production is good at that level, it's nice to hold some back that you can take advantage of a hot spot market when it comes up.
Yeah, yeah, and those lines are going to be at different places and for different people,
Yeah,
depending on how new they are in producing, how much of their capital they have financed versus how much they have paid off, what their yields look like. It's each farm is kind of a snowflake when it comes to those types of decisions. And like I said,
yeah,
I'll never be able to tell a producer that better than they know themselves.
yeah. Um, so maybe another question to start to kind of wrap us up. And hopefully I've been asking all the perfect questions that our audience wanted to know, but kind of last chance, if there's a question that you want to ask Ryan, now would be a good time to type it into the chat there. But something like the acres are pretty much planted now, unless you live in, I don't know, northern Canada. Uh, but going into harvest here, what are like pieces of data or what are information that farmers should keep their eye on? Yeah, going into harvest season and thinking about, like we're saying, how much to contract, how much to hold back. What are good things for farmers to keep their eyes on here in the next few months?
Yeah, I think to whatever extent you can keep up on policy and how uncertain policy looks. Because again, as things go back and forth, businesses get more skittish and they get less interested in conducting business. And we're seeing that, we talked a whole bunch about corn and soybeans, but talking with some organic wheat merchandisers this whole first half of this year. And it has been an issue within the organic small grains and wheat industry that millers are having difficulty contracting with growers because end users are hesitant to put themselves in any kind of position because they don't know where consumer demand is going to be.
So that uncertainty is working its way up the supply chain, you're saying?
Absolutely. If they don't feel confident that consumers are going to have incomes to come into the grocery store space
Yeah.
and pay premiums for premium products, they don't want to put themselves on the hook for a large supply position there. And so, um, things that cause uncertainty and disruption, whether it be to trade or macroeconomics or whatever have you, are going to ultimately be counterproductive to having a growing, healthy organic industry. It scares away all the fish. You're just throwing a big rock in the pond.
Uh-huh.
Um, Outside of that, I mean, everyone loves to watch weather. The one thing that I'm watching right now, and I think might be kind of interesting, and I'm a little bit jaded because I've watched these things long enough, but we all sit around and we watch the crop progress and crop planting this time of year and get our hands all in the ringer. I think it's real interesting on the planting side of stuff and the weather side. Like you can draw a line down the US right now, and if you go west of the Mississippi River, we've kind of seen this trend of dry and cold, and planting has just smoked through. I mean, we've planted super fast. Uh, but if you go west, it's definitely been a little bit wetter than
Mhm.
normal. And so the pace of planting has been delayed there.
East.
Oh yeah, east. Thank you.
Thanks, Eric.
I said west twice, didn't I? Yeah, if you get
So
east,
just to be clear, you're saying west of the Mississippi, things are mostly planted, but east, it's been wetter.
right. East of the Mississippi, it's been colder and drier, where west it's been wetter. So we've seen the slowdown in planting. And a lot of times, whenever we look at that, we concern ourselves with, are we getting planted in time? And is that delay going to ultimately result in some kind of yield loss because you don't get your right number of growing degree days or you don't pollinate when you need to?
Mm-hmm.
But we're not there yet. But I think if you kind of extrapolate from where we're at now and you carry that trend forward, I'd much rather be a little bit slower and wetter going into June for planting than fast and dry, because that means that you're really going to need precipitation over June and into July ahead of
Right.
that pollination window for that corn crop to set up well. There's enough tractors, and we'll probably get enough warm days, that east section of the corn belt east of the Mississippi, that corn will make up for itself. You've got a nice amount of subsoil moisture. You you're getting planted in a relatively decent time period. I think that wet context, even though we've been a little slower on planting, is going to actually maybe work to the crop's benefit long term.
Interesting.
Whereas west, because we're on a drier footprint and we've planted quickly, moisture is going to be more of a concern and more of a thing to watch in terms of how that crop develops.
All right. Um, well, I guess what is commonly maybe a dry topic, I could just keep going, but we better call it there. I appreciate it, Ryan. Thank you
Absolutely.
so much for taking the time to work with me and sharing your experience with all of us on this episode. Yeah.
Absolutely. Thanks for having me on.
Oh, yeah. To all our listeners out there in virtual land, before you leave your desks, please take a moment to fill out the evaluation. It'll take you about 60 seconds. And your opinion really helps us improve and direct these calls. So I'll put a link to that survey in the chat now. Feel free to just take a look. This is the first Organic Advisor episode of the 2025 series, and we've got, I believe, 7 other episodes scheduled. So we'll hope to see you for the next episode on Tuesday, June 10th, when our topic will be weed management tools and techniques in organic soy. And I'm really thrilled with our guests, but I am a weeding tool nerd. And we'll be speaking with farmer and cultivator dealer Matt Saddleberg from Michigan of Bayshore Sales, and also Sophie Rives Auger. I don't speak good French, so you guys will have to forgive me, but it's always nice to have different perspectives. And Sophie's a government agronomist in Quebec, Canada, specializing in organic weed management and field crops. So we'll be really happy to have those two on and talk about weed management and soy. I wish you all a safe early summer and just enough rain. So thanks a lot for joining this first episode. Pleasure to have you.